The obesity drug market just exploded into a $100 billion gold mine. Novo Nordisk's oral Wegovy just got FDA approval, and most investors completely missed it. Here's the problem. You're watching competitors fight over scraps while one company rewrites the entire market. In the next 8 minutes, you'll understand exactly what changed, why this matters to your wallet, and whether you should position yourself now. Most people will ignore this and watch others profit instead. Let's start with the shocking fact nobody mentions. The obesity drug market could hit $100 billion within 5 years. That's not hype. That's what Goldman Sachs, McKinsey, and Novo's own projections show. But here's what makes you money: understanding why this approval matters more than you think. Stick around. Before this approval, Wegovy meant injections every week. You had to stab yourself. Needles, bruises, inconvenience, that limited adoption. Period. But this pill, oral delivery, changes the entire game for you and millions like you. Here's what happens now. Patients who refused injections suddenly become customers. Doctors can prescribe it easier. Patients take it at home. No medical office visits required. This isn't a small upgrade, it's a 10x expansion of addressable market. Consider this: in 2023, roughly 2 million Americans used GLP-1 drugs for weight loss. Projections show that number hitting 15 million by 2027. But here's the critical part that affects your investment thesis: the oral version could double that. Why? Because convenience drives adoption. Psychology drives behavior. People choose pills over needles, full stop. Novo understood this. That's why they invested billions developing this exact formulation. Now they have a moat that competitors can't easily cross. They own the market leader position, and the convenience factor, that's worth billions to shareholders like you. But wait, there's something else they're hiding. Let's talk numbers that actually matter for your portfolio. The global obesity market sits around $2.5 billion today. Wegovy and similar GLP-1 drugs are projected to capture $50-100 billion of future revenue. That's not typo. That's conservative analysis from major investment banks. Here's why it matters to you. Novo Nordisk already dominates this market. Their market share, approximately 65% of GLP-1 prescriptions. Competitors like Eli Lilly and Viking Therapeutics chase from behind. But Novo's oral pill gives them first-mover advantage in the new delivery system. Consider the financial impact. If Novo captures even 60% of a $75 billion market by 2028, that's $45 billion in potential annual revenue from this drug alone. Their total revenue today, roughly $20 billion annually. You see the scale. This transforms Novo from major pharma to dominant force. Stock multiples expand, shareholder value explodes, dividend potential increases. However, and this matters, competitive pressure is building faster than you think. Eli Lilly's tirzepatide is gaining ground. Viking's oral solution launches soon. The question isn't whether Novo stays dominant, it's how dominant and for how long. That determines your return as an investor, but before you rush to buy shares, you need to understand the risks. Novo's approval sounds perfect, but it's not. Here are 3 risks that could crush your returns. First risk: regulatory backlash. Congress is scrutinizing obesity drug pricing hard right now. Wegovy costs roughly $1,300 monthly without insurance. Politicians see that number and get angry. What if price controls force Novo to slash prices by 40%? That's a $18 billion revenue hit on $45 billion projections. Your investment thesis collapses. Second risk: insurance coverage limitations. Right now, most insurance won't cover Wegovy for cosmetic weight loss. Only metabolic condition patients qualify. What if that doesn't change as fast as projections assume? Market size shrinks, growth slows, valuations compress. Third risk: competitors move faster than Novo. Eli Lilly's tirzepatide data is incredible. Some studies show better weight loss than semaglutide. Viking's oral GLP-1 hits market in 2025. Sudden competition could slice Novo's market share from 65% to 45% within 36 months. Revenue projections, cut by a third. These aren't theoretical risks, they're happening now. Yet most stock analysis ignores them completely. So how do you navigate this minefield and position yourself correctly? Don't put all your eggs in Novo. Here's a smarter framework for your portfolio. First option, Novo Nordisk NVO, the leader. Pros, market dominance, oral advantage, projected growth through 2027. Cons, valuation premium, regulatory risk, competition. Price, currently trading around $280-300 per share. Risk level, medium-high due to priced-in expectations. Second option, Eli Lilly, the challenger. Their tirzepatide shows stronger weight loss in recent trials. Pros, superior efficacy data, lower regulatory risk perception, growth optionality. Cons, smaller initial market share, manufacturing scale challenges. Price, currently around $800 plus per share. Risk level, medium with upside surprise potential. Third option, SBDR S&P 500 Healthcare et Roman 45, diversified exposure. Owns Novo, Lilly, plus 30 other healthcare leaders. Pros, reduces single stock risk, captures entire sector growth. Cons, dilutes upside exposure, slower gains than winners. Price, around $130-140 per share. Risk level, low to medium. Your framework, 50% diversified healthcare index, 30% Novo Nordisk for direct obesity play, 20% Eli Lilly for competitive hedge. This allocation captures upside while managing downside risk. But here's what you must understand before deploying capital. Forget the hype. Ignore the noise. Here's what actually matters for your financial future. Obesity affects 42% of American adults. That's 140 million people. Globally, 800 million people need treatment. For the first time in history, effective pharmaceutical treatment exists. That's not a fad, that's a permanent market. As people age, obesity-related diseases compound: hypertension, diabetes, heart disease, joint problems. Treating the root cause with GLP-1 drugs prevents downstream medical costs. Insurance companies understand this. Their math: pay $15,000 annually for Wegovy, or pay $200,000 for heart surgery. Expand coverage, absolutely. This means insurance adoption accelerates faster than current projections. Why? Economics force the decision. For you as an investor, this means earlier market expansion and longer growth runway. Novo's oral pill removes the final barrier to mass adoption. Think about it. A 65-year-old with type 2 diabetes doesn't want injections. A pill, they'll take it. Market expands immediately. This isn't 5-year growth. This is 10-15-year secular trend. Position yourself now while upside still exists. But understand one final critical element that separates winners from losers. Here's exactly what you learned today. Takeaway 1. Novo's oral Wegovy approval opens a $100 billion market where pills crush injections for adoption. Takeaway 2. Competitive threats are real. Eli Lilly, Viking, and others will slice market share faster than Wall Street admits. Takeaway 3. A diversified framework: 50% healthcare ETF, 30% Novo, 20% Lilly, captures upside while protecting your capital from single stock concentration risk. Now here's what separates investors who win from those who lose. Winners position themselves before the crowd understands the opportunity. You now understand it. Most people don't. Don't sleep on this trend. The obesity treatment revolution is here, and it will reshape healthcare forever. Your question isn't whether to invest in this sector. Your question is how to invest in it intelligently. Use the framework from this video. Build your position methodically. Monitor quarterly earnings. This opportunity exists for the next 7-10 years minimum. You don't need to rush, but you do need to act. If you found this analysis valuable, subscribe for daily content on pharmaceutical opportunities, healthcare trends, and the investment frameworks that actually work. This is where smart money goes when it wants real returns.